Oh, thank you. Thank you so much. All right, I'm gonna say it again because that was really quiet, you guys. Good morning, everybody. Happy New Year. It's been a heck of a year, right? Yeah. Everybody have a good New Year?
Yes.
Yeah. All right, so we're gonna do things a little bit differently this morning. A lot of you guys are used to starting on Mondays, and we start off with our weekly market update, right? And we cover a lot of information about what's happening in Los Angeles County, in Orange County, in San Bernardino County, in Riverside County. And especially the last 2 years, that information has been very interesting, right? We've seen home values shoot up. We've seen a lot of activity. A lot of the things that maybe we anticipated or expected at the beginning of the pandemic didn't happen. And a lot of the things that did happen have been pretty surprising for all of us. And so what I wanted to cover today is we kind of get started in our new year. We're going to do a couple things this morning. One, instead of looking at the weekly market update, because the new numbers aren't out for the year anyways, right? So we'll look at that next week. What we're going to be looking at today is kind of reviewing some of what has happened over the course of the last year, and 2 years almost, right? And we're going to be talking about some of what we're forecasting for this coming year. Fair? Yeah. All right, my friends. So let's go ahead and jump right in. Now, sorry guys, mandatory new disclosure, the first one of the new year. You know, we have to talk about the TCPA. Of course, if there's anything that you hear that is a great script that you want to go use with your clients, please just make sure that they are not on the do not call list. We are also going to be talking about expireds today as a new market of the moment, right, that's coming up. And we have some expireds and some stuff for you guys today. We always look to make sure that our lists are scrubbed and we're not calling anybody on the do not call list. All right. Mandatory disclosure over. All right. This is going to be probably one of the last times, unless we have interesting data that comes up, that we're going to be looking at the showing time data for the last couple of years. So I want to talk a little bit about this. What we know is that our light blue line, the one that looks pretty flat and consistent throughout, right, is going to be the baseline that is 2019. I'm going to be up here. Everybody okay if I take off my mask? Yeah. Okay. Thank you, my friends. All right. So we look at our baseline, right, which is 2019. Now, 2019, we were not in any sort of crazy pandemic. 2019 was a pretty standard year, like any other. We can see that baseline of showings kind of can stay pretty consistent throughout. Now, anytime we see any dips in here, we always want to inspect what we're expecting. It tends to be holidays. Mother's Day, Father's Day, Christmas, New Year's, etc. Now, 2020 was a little bit crazy. So 2020 is going to be our dark blue line. We have a major dip that occurred right when we went into the lockdown. It's a shutdown. And all of a sudden, everybody said, we can't do real estate. You're not essential workers. You got to go home, right? We all remember that. And then we saw that increase as that was lifted, as we were categorized as essential workers. The difference being that when that happened, almost every showing that we had was a scheduled showing. So it wasn't, we were going to open houses, right? It was, we were scheduling showings and the majority of those were scheduled via showing time. And so now we had a lot of that data that was collected via showing time. Of course, we still have different dips, right? Different peaks and valleys that occurred around the holidays, but we saw showings zip up for a couple of reasons, right? So we're going to talk about this. Why is it so much higher than the last year, than the previous year, even this past year? And so we know that there was everything was limited to showings. There was no open houses, right? When we see that kind of that decrease that happens in the yellow line, that's when all of a sudden open houses were re-allowed. Okay, so that's going to be one. We also had inventory constriction. I think everyone can agree there's not enough inventory in the market. Fair, right? And we've seen that over the course of the past 2 years. Now, because of that, all of a sudden your clients were seeing more properties because there was a lot more competition. So we saw that showing time numbers go up. Of course, we have the peaks and valleys that occur. A lot of that is going to be holidays that happen, Mother's Day, Father's Day, 4th of July, New Year's, Christmas, etc. When we came into this year, which is going to be the gold line that we can see up here as well, that was 2021. Now in 2021, we saw it kind of stay consistent with what was happening beforehand. And then we saw a big drop. All of a sudden, open houses were allowed again. So we saw most of those viewings go to open houses. I bet if some of you had listings, you said first showing at the open house, right? We limited the amount of people that were coming into the property, not just because of COVID, but because of everything that was occurring. Now, this data is going to be really interesting moving forward. We probably won't look at showing time data as much. There's about 3 or 4 competitors that have already hit the market, because we all know that in the last year, showing time was acquired by Zillow, right? So we'll look at it if there's any interesting data that comes up, but we'll see, right? But I always want us to kind of look at that information as well. Now, what we're really going to talk about today, and just to put this in perspective on the numbers, right? As we ended 2021, the number of showings scheduled through showing time was down about 62%. That's going to be important when we talk about what's going on with inventory. So the first thing I want to start off with today is going to be forbearances. How many of you remember us talking about forbearances really early on back in 2020? Now, guys, I got a lot of hands. Good. I'm glad you guys were in those classes. All right, forbearances. What's a forbearance? We know that when the pandemic hit, right, our financial institutions did what? They said, hey, Mr. Homeowner, this person that has a mortgage, we're going to give you an option. Would you like to go into a forbearance? There's 4 types of forbearances. One is, hey, we're going to go ahead and extend the life of your mortgage. That one's okay, not too bad, right? Forbearance number 2 is, hey, we're going to increase your payments. Once you're back in forbearance, there's a lump sum. Hey, you're going to not have to pay for a little while. And then we're going to give you a lump sum that you owe right when you're about to start. That's probably the, pretty bad. And then the number 4, we're not going to give you any terms now. We'll figure it out later. It's kind of scary, right? Yeah. I don't know about you guys. My own brother got called by his financial institution, and it was easy as this. They said, hey, would you like to go into a mortgage forbearance? Over the phone, right? Over the phone. We had clients that you guys have had or brought in that all of a sudden didn't have the opportunity to refi, even though they had equity and had jobs, because they decided to go into forbearance because they didn't know any better, because there wasn't a lot of information about it, right? So a lot of what happened is we saw a lot of these forbearances occur. Those numbers went up. And to put it in perspective of where we're at, so I think this is really important to look at, is we can see where we started in March of 2020, where it shot up and then it started going down. And we've seen this decrease over time. The reason that this is really important for us to look at, right, is how much the forbearances have gone down, is because I don't know about you, but I heard a lot of the market speculation or the consumer speculation, because, right, consumers don't necessarily know the market in the same way that we do, that said things like, there's going to be a lot of foreclosures. There's going to be a lot of short sales on the market. Have we seen that? No. So let's talk about that, right? Market speculation and what the consumers thought was there was going to be a high amount of foreclosures and short sales. Now, foreclosures did go up significantly. We saw that in the last slide, right? But what else happened? What was there a moratorium on? Evictions, but also foreclosures. I heard it over here, right? There was a moratorium on both evictions and foreclosures. What this means is that while we had properties in potential forbearance, right, those were not going to get foreclosed on, but this also stopped any of the normal foreclosures that were occurring at the time. We had some, I know of clients that sat in waiting for court dates for 2 years, right? It took a long time. So we know that while there was a lot of forbearances that occurred, there was no foreclosures and no evictions that have occurred. In fact, the foreclosure moratorium was not lifted until July 31st of this past year. Now, all of a sudden there was an expectation. Was there going to be a lot of foreclosures? And there wasn't, right? There wasn't. Now let's put that into perspective a little bit. We know there's a couple things that are going on that impact this. One, the US Treasury has a program that is geared for mortgage assistance that was created during the pandemic. In fact, just in California, there's over $1 billion of mortgage assistance that is currently in review for the state of California. Not a lot of foreclosures coming up, right? We had record home appreciation that occurred over the course of the last 2 years. And when I say record appreciation, I mean more appreciation than has ever occurred in any of your careers. Record appreciation that occurred, which also meant no short sales. There's too much equity, right? There's too much equity in the market. So if there's too much equity, we're not seeing now, I'm not saying that there's not short sales, because we did a few over the course of the last 2 years, but there's not going to be as many short sales as was anticipated. Here's the other thing. When we look at what happened in 2008, which is where a lot of the expectation came that we're going to have a ton of short sales, we're going to have a ton of foreclosures, right? It's because we looked at what happened during the last market shift. This shift was different. Fair? So when we look at that, what we know to be true is that following 2008, there was over 10 million homes in the United States that went into foreclosure. Over 10 million homes that went into foreclosure. As we entered this year, there is less than 1 million homes that are still in active forbearance. Now, 1 million, 10 million, right? 10 million that went into foreclosure, less than 1 million that have the potential to go into foreclosure, right? If it comes to that. Now, does that mean that there's not going to be some foreclosures? No. We are still going to have some foreclosures. It's just not going to be what was anticipated. And this is important because some of you guys have buyers that are saying, I want to wait, right, until all the foreclosures hit the market. I'd be asking, which ones, right? Just out of curiosity, which ones, right? Because we have to educate our clients on this. They don't know this information. They're looking at what happened and how do I think that's going to impact this particular market? That's what they're looking at, right? They hear the overarching picture. So it's really important for us to put that in perspective of what happened in 2008 versus what is actually happening right now with the market, not only for ourselves so that we know what is the business that we should be going after, right? But also so that we have more clarity around how to best share this information with our client. Now, the other thing that's going to be really important to know, there will be NODs and trustee sales, right? I'm going to be looking tomorrow and I will share that data on the hub because court's opening back up, right? We want to see what is actually hitting the market here at the beginning of the year for that, right? So we will be talking about NODs and trustee sales that do occur. Loan modifications. We're going to see a lot of loan modifications this year because a lot of people are modifying the loans that were in forbearance. Just because there is less than 1 million homes that are in mortgage forbearance right now doesn't mean there's still activity around them or not still activity around them, right? Some of those will modify. Some of those will still need to sell. And so we want to know how to have that conversation around those as well. California in particular, we know that program is still in review. More than likely, we'll see some more activity around it at this first quarter of the year around what is going on. That was sent as a proposal to the US Treasury on August 22nd. So it's been pending for a while, right? There's a lot of other stuff that's been going on, so it has not been issued yet. But that's something that you want to be aware of for your clients. Here's the thing. When we talk to our clients and our goal is to have a lifetime client, we want to build goodwill and trust. And sometimes that means we help them on something that doesn't always lead to an initial sale, right? Sometimes it's we help them save their home because we want to gain those referrals and we want to be able to earn their business later. Fair? So this is going to be an important information as well when we think about what is coming down for California specifically. Any question on forbearances before we move to the next topic? Now, I just saw a lot of nodding heads. I'm like, all right. All right, price appreciation. What happened to prices this last year? They went up. Why? Supply and demand, right? That's huge. That's very important for us to think about is what happened with supply and demand this last year. So a couple things. These are some of the more recent articles that came out. Let me move them to the other side. Yeah. Let me move them to this corner over here. Okay. Make them smaller. All right. U.S. home sales prices hit another all-time high, leaving buyers in the dust. I'm going to note the reason that I chose this headline. These are very clickbaity headlines, but here's the thing. This is what your clients are seeing. So they get nervous, right? The buyers are like, oh, wait a minute. What? I don't know if I want to buy. And that doesn't necessarily, just because we are in a seller's market, doesn't necessarily mean that it's not a good time for your clients to buy. But I want you guys to know what's out there, what they're seeing in articles that are hitting the market right now that might be making them nervous. This is another one. Mortgage rates dip as Omicron variant triggers market volatility. So what do we know is happening right now? Omicron is a major thing right now. We're seeing the pandemic, right? Numbers are going up. That's important for us to know too, because it does impact the market as well. We saw mortgage rates go up slightly, and then all of a sudden, Omicron came into play and the mortgage rates went back down, right? Why? It's because the government gets nervous when we have any type of volatility like that in the market. When the market economically, right, starts to recover, the government says, all right, it's okay, we're good, right? But all of a sudden, when we see more of that volatility, they say, hey, you know what? Let's do what we can to help influence keeping the economy good. So they affect interest rates. That's their lever that they pull, right? And they lower the interest rates again. Okay, so a couple of things we're going to review, and then we're going to talk about market forecasts. When we review what happened in the last year, this is going to be really important. I want to put this percentage into perspective for you. The median home sales price rose 15% year over year to an all-time high during the 4-week period ending December 19th. Rose 15% to an all-time high. This has never happened before. Whether you've been in business for a year, a month, whether you've been in business for 30 years, since we've been recording this information, this has not happened in a given year, that we've seen an increase in appreciation this much, this high, of 15%. I don't know about you, I'd be calling every single one of the homeowners that I know and say, hey, you got a great gift for the new year. Did you know that your home value went up by 15% over the course of last year? It's huge, right? That's huge. Now, we also know that in the course of December, when we started looking at December, right, pending sales rose 0.1%. It was the smallest year over year increase since 2020, since June of 2020. Prices are really high. Sales didn't necessarily go up very significantly. This has to do with supply. It's not that people aren't out there wanting to buy. It's that there's not that much inventory for them to buy. But I'm going to put this in perspective. We had 827 expired listings that hit on January 1st. So there's still things that aren't necessarily selling, right? And we have that list for you guys as well. But here's the thing. We know home sales fell to an all-time low. They fell 26%. This is within the last few weeks, right? That we've seen this major drop in sales. So a couple of things to put in perspective. Prices at an all-time high. Also holidays, right? We're also in holidays. So we see sales numbers kind of go down because what happens? People take a break, they go on vacation, etc. But sales prices are going up. Then we saw some volatility with the interest rates. And so as the interest rates went up, we saw mortgage applications decrease. And then Omicron came into the picture and mortgage rates went down and we saw mortgage applications increase, right? Because there are individuals, especially your buyers, that want to take advantage of the lower interest rates that helps them put more money towards the purchase of the home than it does to interest. That's important because as we go into the next year, we're going to anticipate that it is very likely that once the pandemic kind of gets back under control, right, that we will see mortgage rates go up. What we are not anticipating, there is not one of the major economists that we reviewed, right, for California, Realtor, Zillow, right, they all have their own economists on file. Not one of them is forecasting a decline in prices. Now, they don't necessarily all agree on how much prices are going to go up, but they're not forecasting a decline in prices. So if we're anticipating an increase in mortgage rates, but not a decline in prices, it's going to be best for your clients to take advantage of the low interest rates that stand right now, right? So a couple things on that with Realtor.com. So like I said, they don't all agree, right? They don't all agree. Realtor.com is anticipating that home price growth, while it is beginning to decelerate. Now, so what does that mean? It's not, we had a 15% increase last year. Nobody is saying, hey, we're gonna have another 15% increase. They're saying, hey, it's slowing down, but it's still going up, right? It's slowing down, but it's still going up. So they are anticipating that home sales will increase about 6.6% and home values will climb about 2.9%. That's Realtor.com, their chief economist, okay? We also have CAR, the California Association of Realtors, that does their own market forecast. What they anticipated is that in California specifically, we will see a decline in home sales of 5.2%, but a 5.2% increase in purchase price over the course of the next year. What do you think of when you hear that? That we're going to see a decrease, and they think we're going to see a decrease in home sales, but an increase in price. Yeah, I said it earlier. This is a trick question. Supply and demand. I was like, I don't know where that came back here, right? Awesome. Supply and demand, right? Is we see an increase in price when there's not enough supply. So what we can anticipate and what we are likely anticipating is that we still have a tight supply. We had a lot of construction that didn't happen because of supply chain issues, right? So there's a lot of new development that didn't happen over the course of the last couple of years because one, pandemic, right? And then also we have supply chain issues that are happening. I mean, we experienced it even with the office on getting floor, right? Supply chain issues that happen. So that's important for us to look at as well, because while we're anticipating that there's going to be continued demand because there's still a lot of remote work that's occurring. So people are moving a little bit further out. We've seen a lot of migration out to the outer counties, San Bernardino, Riverside County. We've seen those sales numbers increase significantly, right? There's still limited inventory. So it's going to be important for us to take into consideration as well. Now let's talk about California. So we talked a little bit about California pricing, California housing bills, and then the housing element. There was 31 housing bills that passed in the state of California, housing related bills that passed in the state of California in 2021. We're not going to talk about all of them because they don't all have a major impact, but I want you to know that of the bills that passed, there was 31 that were specific to housing. What we are going to talk about is going to be, any guesses? What are the hot button assembly bills that everybody's talking about right now? 9 and 10. Right? 9 and 10. That's going to be huge. And does anybody know what the housing element is? Housing element's important. Oh, we're going to talk about that too, because this is going to be really important as we think of what is happening over the course of the next year specific to California. So a couple things. Even though we've seen a decrease in supply, new home sales are going up, right? New home sales are soaring because we need more new homes. We need more construction. Okay, so Senate Bill 9 and 10 went into effect. What is today? The 2nd, the 3rd? Went into effect 2 days ago, officially. Senate Bill 9 and 10 Senate Bill 9 and 10 are going to be two bills that are really geared towards creating additional high density housing in the state of California. Similar to the accessory dwelling unit bill that passed years ago, right? That was designed to create additional housing because guess what? California needs more housing, right? We don't have enough housing to meet the demand in California. Senate Bill 9 is geared to basically eliminate single family residence zoning and allow 2 to 4 units on lots that were originally designed for SFRs. When we look at Senate Bill 10 is designed to allow up to 10 units on particular lots, okay? Now, there are parameters around this, right? It has to do with the lot size. There's a lot of other things that go on with this. Not every city and not every county is on board with this. Not all of them like it, right? Same thing with the ADU bill that was passed, is all of a sudden the cities and counties have to figure out how are we gonna roll this out, okay? So with this particular Senate Bill 9 and 10, in terms of being able to roll out this legislation, there are certain cities and certain counties that are putting their own restrictions in place around this. There was a lot of stuff, or city ordinances, things like that, that passed over the course of December, including, as an example, in Pasadena. If you ever driven in Pasadena, they have kind of that canopy of trees, right? We all know that's pretty That's what we expect when we go to Pasadena. Now, all of a sudden, you're bringing in new construction and they're saying, hey, what's going to happen with our canopy of trees? And so one of the local ordinances that they were looking at putting into place said, oh, well, if you build here, you're going to need to plant 2 trees from our list of endangered species. What happens? Increased construction cost. So all of a sudden, some people say, well, I was going to do this, but now the value isn't there. The return on investment isn't there because my expenses just went up. So this is going to happen in different cities. There are cities that we're looking at saying, hey, we don't want this to create parking issues, so we're going to require subterranean parking. Or we don't want there to be, you know, too many issues with views, right? You have complexes that have views. And so they're saying, well, it can only be built to a certain height. So a lot of different things that are going to be coming up around this. Now, there's also going to be an initial initiative, and to put this in perspective on impact, overarching impacts of what this affects in the state of California. Two-thirds of residences in the state are single family residents right now, meaning that technically up to 2/3 of the properties of SFRs, right, would have the ability to potentially have construction, depending on lot size, depending on the parameters in that particular city. About 75% of the developable land, right, that is waiting to be developed, that has not been developed yet, was potentially zoned for SFR. Meaning now we could be looking at higher density housing on those lots. Again, there's a lot of city parameters around this, but the reason that I bring this up is, one, it's going to be important for you to understand that when you're talking with your clients, right? It changes values. So same thing with ADUs. What was the issue that we had when people started developing ADUs? Was there wasn't appraisers that knew how to appraise them, because it changed the value to have an additional now income available on the property. Now, same thing, there's a couple of different organizations, Our Neighborhood Voices being one of them. They're proposing a measure that basically says, hey, California, we want to give the rights back to the voters in this particular area. And so that's currently, they're in signature gathering phase, but that may be something that is on the ballot, probably not till November. Right, probably not till November. So just to kind of put that in perspective of what this looks like right now. Now, housing element is going to be an important factor around this. Every single city has something called a general plan. That general plan has to do with what is happening in that city as it relates to what is their economic plan, what's their plan as it comes to creating more housing, et cetera. We just had the census, right? The census comes in and it determines demographic information as well as socioeconomic information about the people that live in a particular city. The reason the census is important is it's going to affect things like there's redistricting that occurs. There's a lot of different factors that come in. What it relates in housing is that California has something called the housing element. It's a portion of the general plan for each city. Housing element basically says we're going to come into a particular area I believe it's every 8 years, right? We're going to look at the census data for that particular area, and we're going to give the city an allocated number of how much new construction they are required to build over the course of the next 8 years. And if they don't meet this, now city has a problem with the state, right? Now, this happened last year. So in the midst of everything that was going on, the census was out collecting data last year, right? And they go and they do an environmental report for each city as well. And so they give it by region and then they give an allocation by city. To put that in perspective, Downey is now required over the course of the next 8 years, so by 2029, to build 6,500 new homes.
Wow.
Right? And that's exactly the question that a lot of people have is where? So now we take that in perspective of where is the developable area, and this is what's going to happen. So I'm going to note exactly what will probably happen, not just in Downey, but in a lot of the cities moving forward. Rezoning. Right. There's going to be rezoning, right? So commercial space that maybe is not used, which there is some commercial space, as an example, in Downey that is currently not being used.
Right.
We'll probably see some rezoning is going to be one piece. Also, Senate Bill 9 and 10. Because all of a sudden, the city has to create 6,500 homes over the course of the next 8 years. That's why this is important for us to see all the moving pieces together. There's a lot of moving parts with it, right? There's a lot of moving parts that come into place. Here's the thing, wherever you are farming, I highly encourage that you go and do a Google search, do housing element 2021 or 2022 with your farm area. And really identify how many new homes need to be constructed in your particular area. And might the homeowners that you're working with want to know about that? Might it change what they want to do over the course of the next 8 years for their property? It might, right? It might. And here's the thing, whether we agree with it or not, right? Whether we agree with it or not, here's the thing. They might want to do new construction in their area. They might want to sell and move, right? So either way, it's worth a conversation so that we can identify what that client wants to do, because our job is to educate, to inform, and to help them figure out the solution that's going to be best for them. Okay, so this is why this piece is going to be important as well. All right, so how do we win? A lot of information about what happened in the last couple of years and why this is important moving forward. So this one is going to be, we're going to go through a couple pieces here. Database. I'm going to say it again. Database. Here's the thing. We know that a couple things happened over the course of the last 2 years as well that I didn't talk about. Technology shifts, right? Acquisitions that we talk about all the time. Zillow being one of those, right? What did Zillow shift to in the last 2 years? Starts with B. No? Brokerage, right? Zillow shifted and is a brokerage now. One of the things that they said they would never do. And then they went and acquired different companies that we use in our day-to-day, like showing time, which actually incorporates a lot more than just showing time, right? When we look at what has happened, what did Zillow do really well? So Zillow is the #1 search engine for home search across the United States. They are a lead aggregator. That's what they do. They get leads and then they sell them back to you. They have the biggest database, right, in the market. And then they sell the leads back. And then they said, oh, we're going to go buy a mortgage company and now we're going to give them mortgage too. And oh, we have our closing company and we're going to go ahead and do that too. And then they said, well, what if we hired agents and we just decided to be a real estate company too? But we're also still going to sell leads because we have a really big database. That's what they did really well. So here's the thing. #1 thing that you can do to increase your business is increase your ROI on your database. #1 thing you can do to continue to increase and protect your business is to increase your return on investment on your personal database. That's it, right? And it's simple. It's not easy. It's 36 touch, right? It's educating our clients on all of this as part of our 36 touch. It's having those conversations with our clients around the things that matter to them. Because here's the thing, don't get me wrong. I love when we share different things to our clients. If we have a lot of touches with our clients, we have a lot of touches and we have a deep relationship with our clients, then yes, sharing random information, holidays, all of those things, that's fine, right? But if that's all we're doing, then we don't have that deep enough relationship with the clients. We need to also be educating them on the things that are important to them. Market information that is important to them. Things that are going to affect them in their particular areas, right? That's the information that is going to make them answer the phone every time you call. Not just because we want to wish them just a happy holiday, right? Is we want to give them the information that is going to be relevant to them. Because here's the thing, if not, they're going on Google to go find it. And then all of a sudden they find themselves on a random website that has very high clickability on Google. And all of a sudden they're out of our database and into somebody else's, right? So that's going to be a huge part of it as well. NODs and trustee sales. So I did say that we're not going to experience as many foreclosures as what's been anticipated by the consumer. That doesn't necessarily mean that we are not going to see NODs and trustee sales, right? We're still going to see notice of defaults hit the market. What happened during the forbearances? During the market forbearances, we did not necessarily see any of those NODs. So people were technically defaulted on their mortgage, and that information didn't go anywhere that we could aggregate it. I'm not gonna lie, I looked everywhere. We got a little jealous because in Arizona, they were able to do it via trash liens, which was pretty interesting, right? As they found the properties that had trash liens against them and realized that if somebody wasn't paying their trash bill, they probably weren't paying their mortgage, right? We didn't have that capability to do it here. I asked, right? But it was pretty interesting to see. Does that mean we're not still gonna see notice of defaults? Of course we are. That's gonna be a market of the moment, right? We still have individuals that defaulted on their mortgage. We still have individuals that aren't gonna be able to catch up. We still have people that aren't gonna be able to wait for the mortgage assistance or qualify for the mortgage assistance. Although we know when the mortgage assistance comes down, and I'm gonna note, it's a grant program, right? When the money runs out, it's gone. That's how grants work. So there's $1 billion, sure. The grants are gonna be up to $80,000, but they're anticipating that they can help between 20,000 to 40,000 people. The spread on that is insane, right? The spread on what they're forecasting, this is the California, right? That spread is huge. So there's gonna be a lot of people that get left out of the dust there. So notice of defaults and trustee sales is still gonna be an area that we wanna look at and that we wanna watch as a market of the moment, because those are individuals that have to sell, right? Now, before we kind of, and then of course expires. We have 827 expires that hit just on January 1st. Now, I wanna put that in perspective. There was less last year, there was more in 2019 inventory, right? Are there expireds? Yes. Are there as many as there were back before the pandemic? No. We still have inventory issues going on. The other thing I want to put in perspective for you guys is really understanding the type of leads that you're pursuing. I think this is one of the things that we make a little bit of a mistake on sometimes, or not a mistake, but we don't always look at it the same, right? When we look at any type of lead, they enter our world at different points in the life cycle of where they're at, okay? So I'm gonna try to shift it this way for you guys. All right, this is not the market, right? Sometimes we look at this and we say, hey, that's the market. What I'm gonna note is this is the life cycle of a client, okay? Leads come into our world here. But here's the thing. This point is when they actually have a transaction. This is the point that we get paid, is when they close the deal. For a long time, we've been taught to value a lead by how close they are to this point. We've been taught to value a lead by how close they are to this point. I mean, no, there is no such thing as a bad lead. There is only bad follow-up. Okay, so I want to put this in perspective. We know leads come in at all ranges here. Way here at the bottom are going to be things like farming, right? What is farming? We're going to a cold lead source and we're trying to grow a lead. We're trying to find somebody, but nobody in a farm is saying, hey, I want to sell today. I hope somebody knocks on my door today. They're not, right? They're sitting at home, they're watching TV, they're with their family, and we go knock on the door and we're trying to find the one that is ready to go. That's a cold lead source, right? Now we get a little bit higher up and we have things like open houses, right? People are walking into an open house and they're saying, I think I want to buy. They're a little bit further up, right? Now, who's way up here at the top? Well, things like NODs that have to sell, not because they want to sell. They're not raising their hand and saying, I want to sell. They're saying, oh my gosh, I'm looking at my bank statement and I might have to sell. I'm looking at my mortgage statement and I might have to sell. What am I going to do? Right? But they're closer to decision-making point. Mm-hmm. You have expireds. They raised their hand and said, I wanted to sell. And let's be honest, the majority of them think what? That they had a bad agent. Is that true? But that's what the majority of them will think. And so we go into that conversation knowing that that's where the mindset is. We know that the majority of the time it's going to be a pricing issue. Sometimes it's not, right? Sometimes it's a complicated transaction. Sometimes there's something on title. Sometimes there's a lot of different moving parts, but the majority of the time it becomes a pricing issue. right? And we know that going into it. So if we know that right up here, we have our expires, our FSBOs, not there's a lot of FSBOs right now, our NODs, right? Also referrals are up here.
Divorces.
That's true, divorces.
Different prominent.
Exactly, they might not want to sell, but they have to sell, right? All of those things are gonna be things that are up here, closer to the top, closer to your decision-making point. Now, here's the thing, the next day, that client goes down to zero, right? After they close on that deal, because nobody buys a home the day after they bought a house. But here's the thing, what we know to be true is that when we really build a powerful database, when we stay in communication with every single person, no matter at what point they enter our funnel, right? No matter when they purchase from us, what we know is that between 8 to 10 years, they get right over here. They might sell their house and they might buy another one. And then over here, they might sell their house, they might buy another one. But we have this entire time period right here. Now, when they get closer to that decision-making point, if you don't have that deep relationship with them, you're not gonna get that transaction. Or if you haven't followed up with them, if you haven't built your database, no matter where they come from, you won't get that next transaction. But here's the thing, it's not just about those. We really have a powerful database. What do we get from our past clients?
Referrals.
Referrals, right? If we could get a referral every other year, during that time, that's 4 to 5 potential deals. What if we could get a referral a year from our clients? It's huge, right? That's huge. But we have to understand 2 things. One, at what point in their life cycle are we getting them, right? Because we have to handle them differently. And expired is different, right? And expired is different than a referral. A referral is I love referrals, right? We call them and it's like, hey, so-and-so referred you. I want to be able to help you. And they love you already. They've already been hyped up, right? Those are easy. We love those, right? But we can't build a business just on those. But here's the thing. What if all of a sudden I have an expired and I help them sell their home, but I stay in contact with them. And now when they're ready to buy, I can help them, right? And when they're ready to work with somebody else, I can help them. When they have a brother-in-law, I can help them. And now I'm building a very powerful book of business because I remembered about database, right? So that's going to be important as well. Being the local expert of choice. What makes your client call you instead of calling somebody else? I'm going to know. It's not that you send them Happy New Year's every year.
Your knowledge. Your
Yes.
follow-up.
Yeah, right? It's not just that you send them Happy New Year's. That's great. We want to send them those messages, right? But we want to be the local expert of choice. That's why we go over market data like this. That's why we go over the industry updates, because I will guarantee you that if you're able to talk to your client about some of the things like this, you are going to be that person that is the first one that they call when they have a question. I want my clients to be able to call me when they have a question about appraisal, when they have a question about refinancing, when they have a question about changing their roof. Right, I'm gonna know, and I'm gonna give you guys a sample of that. I have a client that I sold a property to in 2018 in Compton. They called me, I want to say like in March of this year, and their question was, they were thinking about doing a cash out refi on their property to put solar panels on their roof. But they called me. And I talked about the amount that homes had appreciated, or I just said, hey, just FYI, I want you guys to know that your home is appreciated by X, or homes in your area have appreciated by X in the course of the last year. And the client said, whoa, that's crazy. And they called me 2 weeks later and they said, hey, I talked to my job and they said I could be remote forever. I want to list my home. But they called for solar panels on the roof. They called to do a refi for solar panels. You want your client to call you about everything. And then you want to give them the information that gives them the opportunity to make a decision if it's right for them to move forward. I didn't say, hey, do you want to sell your house? right? I didn't say any of that. All I told them was, this is how much homes have appreciated last year. I just want you guys to know as you're going through your refi. That's it. So it's important that we share that sort of information. We're sharing about appreciation. We're sharing about what might affect them in their particular area. If you are farming an area, I highly, highly recommend that you look into the information around that area as it relates to local legislation, right? Things like construction and housing bills, local ordinances that are going to affect them, especially in a farm, right? Especially in a farm. If you're not farming and your clients are all over the place, because we all know that happens, right? We've got clients all over the place. That's why we talk about county information, right? And we're not just going city by city. We're talking about the counties. What do we need to know in that particular county that might better serve our client? Because the majority of you I know are covering LA. Some of you are covering Orange, and we're seeing a lot of San Bernardino and Riverside, right? Why? Because our clients are selling over here and they're moving over there. Those home prices are lower. That happens, right? That information is going to be important as well. Last but not least, segmentation. Segmentation. I don't know about you guys, but if there's a problem that is specialized in my property, if I've got something going on, I know when something happens at my parents' house, they call a plumber for a plumbing issue. They call an electrician for electrical issue, right? They call a foundation expert for foundation issues, right? Segmentation is going to be a big deal moving forward. Here's the thing. We have a lot of people that are in real estate. There are more realtors in the market than there have ever been. I'm just being honest, right? I'm just being honest. This isn't to make you guys nervous. I'm just sharing, right? What is the truth right now. The reason that I share that is that's why it's so important that we are sharing the information that is going to be most relevant to the client, being the local expert of choice, but also that if we are wanting to specialize in a particular market or we're wanting to pursue a particular type of client, that we are taking segmentation into consideration. So what do I mean by segmentation? If you're hearing what we're talking about with housing element, you're like, you know what? That's a market that I want to pursue. I want to go and I really want to dig into new homes and the development and everything that's going on around that, right? Then looking into the new home builder developer course that came out with KW might be something that I'd say, hey, yeah, I'm going to take that as part of my growth plan this next year, right? I know some of you are interested in sports and entertainment, right? And being able to work with those clients that maybe need a little bit more of an attention to detail and also high discretion. And really understanding how to be able to deal with and give the highest level of customer service to somebody that might be in the sports and entertainment industry. Well, guess what? The sports and entertainment program right now is open and accepting applications through January for those that will be inducted into the new group in February, right? Or maybe you're saying, hey, you know what? I really want to get into commercial because this is really interesting what we're hearing about potential rezoning and some of the opportunity that there might be to sell commercial property, maybe to developers, right, as a part of the market. And so maybe it's, I really want to dig into commercial real estate this year. That's a segment. There's relocation, right? Relocation is huge. Now, what happened to a lot of companies that went remote? They said, hey, we're going completely remote. And so we're relocating our division out of state, or we're locating to a different area. I want you to imagine what life would look like if you got one major relocation client. Imagine you were the agent that picked up when a company like Apple relocates to another area. That's huge, right? That can change somebody's life. Or being the agent that gets picked up for a new development project. Like there's a huge development project that's happening in Montebello right now. How do you guys know we're getting a Topgolf in Montebello? It's huge. There's a lot of development going on, right? So all of those different segments are going to be important for us and the market as well. All right, what questions do we have? That's a lot of information. You guys are so quiet.
That's a lot of good information.
Yeah,
It is. It is. We're gonna get ready to hand out some champagne.
Yeah.
I heard champagne coming. I heard some stuff happening in the back over there. I want to know, guys, it's a lot of information. What questions we have, what thoughts, what do you want to implement over the course of the last year or next year?
I would say just more exposure and knowledge on commercial. Yesterday when I was passing through a particular city, I did notice a lot of empty buildings, a lot of empty commercial strips. So I think that's an area that I want to develop
That's gonna be huge, right? I mean, we think about what is happening in the commercial space. We saw a lot of people went remote, right? A lot of people went remote. You see a lot of restaurants, unfortunately, especially we saw a lot of the smaller ones go out of business, right? Restaurants, small retail businesses. We saw a lot of anchor tenants that left malls. So you guys know an anchor tenant, like in a shopping center,
Yes.
is gonna be like your Macy's, your Sears. What happens is when one of those defaults or leaves on their lease, the smaller retail tenants, they usually will have a clause in their lease agreement that says if the anchor tenant leaves, because the anchor tenant drives traffic, now they have an out on their lease.
Right.
Right, so then all of a sudden you saw a lot of the little stores that left too. You saw a lot of restaurants. I mean, we've seen a lot that shut down out here, right? And so what happens with those spaces? It's gonna be interesting, right? It's gonna be interesting.
I got something, most of the wholesale lenders we work with here at Downey Capital, their big focus right now is to have people refi out of their MI. So they're coming up with programs where they're gonna make the MI disappear, even if you came in with less than 20%. And if you have buyers with less than 20%, there's now programs with less than 20% down payment with no MI. So that's one thing, you call your sphere of influence, you call me, you say, hey, I want you to look at your mortgage statement. You say, Happy New Year, go look at your mortgage statement, because if you're paying MI, I need to refer you to my lender. And then, they're gonna be so appreciative that you're saving them not only $300 a month, but it comes out to like 45, 50,000 on the life of the loan.
Yeah.
If you just get rid of the MI.
Yes.
And another thing, if they don't have life insurance and they have a mortgage, there's now a life insurance program that pays off the mortgage. Within, let's say you have a mortgage for 25, 30 years, you can make that term in the life insurance, and if that person doesn't pass away within that term, they get all their money back plus interest.
Wow.
So it's kind of like a forced savings account. It's the best thing. So those two things is what I'm calling my sphere on for the next month or so. That's something I wanted to offer you guys up as well.
That's huge. And I'm gonna know, I appreciate you sharing that. One of the things that I want to share is this, I saw this happen with I don't remember whose client it was, but the Downey Capital did, is they had a client that was refining and was gonna potentially, I think it might have been that program, I'm not sure. And the client decided instead to sell. Right, which just means Downey Capital gets nothing, but they guided that client back to the agent to then sell that property, right? Which is huge. So that's always going to be a big asset. Is that I appreciate that if the client wants to make a different decision, that they're all for it and they're guiding them back to you guys on what is the best decision for you.
A lot of people don't know the value of the property until they look into refinancing. They're like, oh, really? Well,
They're like,
sell.
what? It's true. Let's get some champagne out, you guys. Woo! And I know some of you guys are watching at home. We're popping bottles, and what I'm gonna do is I'm gonna move this off so we can. Let's see. All right. Yeah, we'll keep it on for the toast.
So I'd also say real quick before you do the toast, to that point, I think it was Forbes that had sent out an article that they wrote that said that 65% of the homeowners in the US have no idea what their home is worth.
Yeah.
And with the fact that the appreciation's gone up 20%, to Luis's point, I mean, if you just call and say, Happy New Year, by the way, did you know that properties in our market area have gone up 30%, or 20% in the last 24 months?
Yeah.
Would you like a property evaluation on your home? I mean, if you just said that, that's like a Christmas gift by saying that, and people don't know about it. So then you're getting into that conversation, because the thing that I see from all this is urgency and listings. Urgency. A lot of your competition is not even back to work yet after the holidays. And as Monica, talked about the numbers, we need inventory, we need listings, and people have a ton of equity now that they don't even know about. So opportunities, a lot of opportunities.
I'm also going to recommend a book for you guys. An easy book. I highly recommend you get this on Audible. It's one of my favorite ones to listen to, although paperback is great too. It's called Exactly What to Say. Exactly What to Say.
I'm still waiting for a few more people.
I'm like, who still needs champagne right here?
Give Fred a glass.
Woo!
Everything that I-
We got some champagne coming.
Fred, get a glass.
Absolutely.
Raise it
Whose
up.
idea was this? Fred? This is great.
We need-
And we just got a new gift to the family, I hear. A new baby. Come in. Come in, we got, who still needs champagne? Raise your hand. All right, we got some champagne coming.
There's orange juice if you want. Change it to almost-
Well, while we pour a bit of the champagne, I do want to invite Downey Capital up to share us all to the camera here, please. To the camera right here. But Downey Capital was a couple things that we were just talking about, what they've done to really help with your guys' clients over the course of the last 2 years. But also they were amazing and sponsoring our first event of the year. So breakfast, champagne provided by Downey Capital. Pretty, eventful day yesterday.
Thank you. My granddaughter was born yesterday. Yeah, this is another granddaughter. Yeah, that was a nice gift for the new year. Well, we're here to support you guys. It's a new year, new beginnings, new opportunities for business. Any questions that you have, any help that we can support you, flyers, loans, we're here to help you. A few realtors have worked with us, and every escrow that we have open, we have closed. We always try to find solutions for you guys, even if there's challenges. We find solutions to close your loans, and we'll be more than happy to assist you. Just give us the opportunity. Nancy has always asked, give us the opportunity, one loan. You might have your preferred lender, but maybe this is the year that you give us the opportunity and try us out. We won't let you down.
Yeah, so thank you, everyone, as Rosie said, that has given us the opportunity. I personally have had the privilege to close some escrows for some of the agents' own homes. So that's kind of great when you yourselves trust us with your own purchases for your own families as well. So I know Rosie's done that for a couple of agents from here. So thank you for trusting us. I know that was probably the first process. Let me see if they can close my deal. We were able to do it. As Rosie said, no loan is perfect. We'll probably have that one perfect loan the whole year. But the great thing about Downey Capital Mortgage is that between us three, we have the experience, guys. We will find solutions to close your deals. And we have a variety types of programs and a variety types of loans that if we don't fit you into this one, we're gonna switch it over and we're gonna close that deal, no matter what, right, Shelly? So, right, Stephanie? Right? So there's a couple of you that have trusted us with it. We would, please give us that opportunity. Come back, Karina. Just kidding. So give us that opportunity. Like I said, questions. We're here for you. We're right next door. Just walk over, say hi. Walk over. How's everything going? Hey, I have this scenario. We have our numbers. I think Fred, Monica, you guys have it listed on the.
Oh, of course.
So if you, for some reason, don't have the number handy, I know we're on the spreadsheet as well. Hey, we're on those lenders, let me shoot them a text. Shoot us all three the text, that's okay. like I said, we are here to help you and close your deal, okay? We want that 30% increase in production from last year, right? So I know some of you guys are higher, but that's not doable right now for 30%. Let's do it. Let's do it. We're here to help you increase that money in your pocket as well. All right? Thank you.
One thing that I want to share, because I think it's so important to say this. I have walked into their office with an agent that has multiple times, that have deals that are falling apart a little bit because they're working with, let's say, an outside lender that maybe, you know, had some challenges on their file, not necessarily the experience to handle some of those transactions. And they have gone above and beyond and even coaching those lenders to get the deal closed in the best interest of our agent and the client. Not to go and take the deal, right? And I think that speaks a lot to the character of the team that we have, that they've even dedicated their time to that, right? And they've earned that opportunity with those clients, with those agents as well, because they saw the difference. I know I send my personal clients over to you guys, so I appreciate all the work that you guys have done. So
Yeah. We have over 20 years plus in experience in lending, so we've seen it all. 4 years, yeah, we've seen it all. Yeah.
You ready for your shopping? Rebecca?
All ready.
and we're gonna say a couple more words. Fred, you wanna share a little bit for the camera,
Yeah, I wanna share a little bit. Hey, everybody. So, like they were saying, so with Downey Capital Mortgage, I'm very happy to work with them. As you know, I see like every agent that comes in at some time meets me. Like at the second one after Monica recruits them. So I'm able to tell our new agents that are kind of like excited and shaking in their boots at the same time, that go over and talk to Nancy, Rosie, and Luis and tell them what is mortgage. I have no idea what that is. And they do. They'll help them. They'll explain the whole process of what you got to do. So that's the type of loan officers that we have here, the mortgage company that we have, that you can go there and ask them anything. I mean, I go over there and ask them the weirdest things, you know, about, you know, my mom's house and stuff. And I'll just say, can we do this? Can we do that? You know, and it's just, they'll find out a way of doing something to help you. All of our vendors, I'm really appreciative of all of them. And as you know, like today, you know, our agents asked us, you know, do we do the, you know, whose idea was this? I go, we do this every year. This is nothing new for our office. So we toast every year to 2022, and I'm just happy to work with you. I'm happy to be in business with all of you, and I'm here to help you. We're here as a leadership team to help you. And Rich, would you like to say something?
Oh, right before Rich, I'm gonna invite Jorge. That way I
come on
can
in,
get Rich and Ed give the. Jorge, come on up to the camera, my friend. And I'm gonna know, I was in Jorge's office early this morning talking about expires, and he's the one that let me know there was 827. I'm in his office all the time asking for all the important data.
You know, every year, Shirley, every year, Chinese, they have the year of the rat, the year of, what's this year?
The tiger.
Tiger.
You're wrong. Anybody else?
You're the realtor.
Nope.
Us?
I'm not kidding. Chinese people, they got together and they changed it.
No.
Yes. It's gonna be the year of the NODs and trustees. I am not kidding. Not kidding. You know that the public crime numbers are going up. Bad, right? It's pretty bad.
Yeah.
Well, if you need your numbers to go up, start hitting those NODs and trustee sales, expires of for sale by owners. It's a lot of business. Thank you, guys.
Ed, my friend, come on up.
Well, Happy New Year, everybody.
Happy New Year.
And I want to thank everybody who has the confidence in me and calling me for your questions and answers. I encourage you to keep doing it because I also learn from your questions. I can't thank you enough. I love this office. It's a great team, and I thank Monica for it, and Fred and Rich. But really, welcome to 2022. Let's see what happens.
Yeah. All right, so I'll close it out. So first of all, congratulations on a great 2021, 2022, I think is going to be a phenomenal year. You know, if you apply some of these things that Monica talked about today, and hopefully you like the new space. We're real excited about the synergy and how it all's come together. So happy new year, and let's make 2022 your best year yet.
Happy New Year! Cheers. Salud. Salud, right? And I'm gonna know, as we go into the New Year's, guys, we just had a record-breaking December. And I mean, in the history of our office, all right? So I'm gonna say goodbye to our people at home. Let's have some breakfast, and then we do have some expireds and information around expireds for you guys today as well.
Okay.
So we'll be chatting about that, but let's eat. Bye, guys.
There's orange juice if you want to turn these into mimosas.